Okay, good afternoon, everybody. Today is Friday, June 13th. It's about 5 o'clock Pacific time. Market is closed. This will be your weekly take on the market, excuse me. I'll be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. I'm not licensed. I can't tell you what to buy, what to sell, how many stocks you should own, what position size you should have, none of that. Partly what makes this disclaimer so important is it allows me to speak freely on these videos. So it's important that we have that and that it's understood kind of the, our role in this. I've mentioned it before, but it's worth repeating. One of the great benefits of working at IBD is most, if not all, my colleagues have skin in the game. It's a place where I can participate in stocks along with our clients. And it's of utmost importance that I protect that and that I'm allowed to do that. It's a big thing for me. All right, so we'll do the same thing, the market indices, stocks to watch, ETFs, and the quote of the week. So the indices, I don't have just but one slide. Sentiment improved. We lost some bears, we gained some bulls, and they came from the neutral side. So it's still not over your skis bullish. It's still more bears than bulls, which is surprising to me, so close to new highs. But we're getting closer. So I think if the market were to come out of this consolidation it's in, make new highs, this will switch, and you'll finally start to see people get more and more bullish as prices get higher and higher. Unfortunately, that's the way they do it. Price is the narrative, not price leads narrative, not the other way around. So let's pull up the indices. So here's the NASDAQ, and you've got this really large consolidation. Maybe you could consider it kind of a double bottom. I think we're going to make new highs. I still think that, but maybe we need to consolidate first, which would be fine. I'm all for that. That wouldn't bother me one bit. We're still above the moving averages. Today was not much of a day, but considering the geopolitical news, it just didn't seem like that poor a day. Now, I lost power at home, so I didn't watch the market almost all of the day. I kind of was just, had one eye on my positions on my phone. I have a handful of positions. I think I had 5 coming into the day, so it's real easy. That's one thing I love about having so little positions is it's easy for me to manage that. I think I had 5 positions, including one that's an ETF. So 4 stocks, an ETF. It's real simple. It's real easy for me to manage that. I'm not fully invested. And so I get into a weird jam like that, I lose power middle of the day. It's not that big a deal. So I don't know what the tape was like today. I don't know any of that. So I'm kind of learning on the go for today's action as well. But it doesn't look like that poor a day, to be honest with you. I know later on last night, the market was down a lot. And then this morning, it felt like it tried to come back. Maybe, I don't know if it ever went positive or not, maybe on the S&P, but I guess near the end of the day, it sold off. So the S&P, I don't think it ever went positive, but it was down 1.1%. So it is a distribution day on the S&P. The NASDAQ was not a distribution day. So you do have some distribution days piling up. I think IBD is still at 80 to 100. I know that on the Slack channel, they were considering maybe taking it down a notch. And probably if they had, let's say they had 10 categories instead of 5, they probably would have gone down a notch. So if everything was 0, 10, 20, 30, 40, and they were at 100, they probably would have gone to 90, just to be prudent. But the markets is still above all of the moving averages. And I still feel like we're going to make new highs, but let's see what that's worth. I just don't put a lot of weight personally in the indexes because they just do a great job of fooling you. And today is a perfect example. Like if you felt like the indexes were going to be poor all day, you were right. And if I had just thrown everything overboard today because of the indexes, I would have missed out on a huge trade, which I'll go over later. So I just, right or wrong, they're just low on the totem pole of things I worry about during the day. Now, if the market's bad, the stocks are going to go down. And when the stocks go down, they hit my stops and I get out. And so is it a chicken or is it an egg? Are the stocks going down because the market's bad? Or are they the good stocks going down, therefore the market's going down? It doesn't matter. If they hit my price, I get out. So I don't think I have to be staring at the indexes all day, trying to interpret every little wiggle that they go through. Gold, I think gold might have made a new high today. Let's see. Maybe the futures did. I feel like the futures did, but holding up really well. Silver, I don't really watch much anymore. I tried silver here and here, of course, wore me out. So the time that it worked, I'm not in it. Like platinum has made a big move, finally corrected. Thought about buying that today, but it's just one day down. Maybe I can get some kind of weakness on Monday. That would be ideal, and maybe I would consider that. If you look at the weekly chart, looks like it's coming out of a really long base. If you go to the monthly, so maybe that's a place to be. I don't know. I don't have a lot of conviction in them, so technically it looks good, but when I'm in them, I just don't have a lot the staying power that I wish I had. What else is index related? How about ETFs? IBIT didn't do much. And then I guess, early on last night, oil was up a lot. I think it was up like at the WTI futures or we're up 10, 12, 13%, I think, because I kept seeing the tweets about it. They closed up, what's that, 6% and change, if this is a good proxy or not. So interesting. And it's the weekend, so not a surprise. People want to take risk off into the weekend. Who knows what's going to happen? So it's natural in an environment like this where people take risk off into the weekend. If there's bad news, the market's going to open lower Monday. If there's not, if it's just a normal day, then I think the market will open higher. But it's kind of a crapshoot, obviously, because there's no way to know either way. So you got to be kind of comfortable with the positions that you have. I think that's it as far as the indexes. So let's go to some ETFs. So there's a new ETF that I wanted to highlight called Granny, I think. Yeah, Granny, Fundstrat Granny, USLLC or LC, Long-Term Capital Appreciation, I guess. Fundstrat is Tom Lee is the strategist. I don't know if he's the PM for this. Maybe he's one of them. But the idea behind the name is Granny is if you've been around long as me, you know what a granny shot is. In basketball, a granny shot was an easy shot, underhand, easy to make. It's like a layup. And I think that's what the idea behind these, calling it Granny. These are quote unquote layups, long-term layups, Palantir, PWR, Blackstone, I think, is in there. Nvidia, Tesla. I looked at it briefly. What's in there? I don't picture myself buying this, at least not anytime soon. But it did get a lot of assets. I think it's already got $1 billion in AUM, and it seems like a good proxy for animal spirits for evaluating the markets. And instead of just the indexes, you can evaluate. We got the mutual fund index at IBD. But ETFs have just gotten so much money that they've really kind of forced mutual funds into like that third position. You got the indexes, you got ETFs, you got mutual funds. In the old days, it was indexes, mutual funds, and ETFs were a distant third. It just kind of first coming out. So it seems like ETFs have just captured everybody's imagination. They're getting more and more assets. And gosh, if it weren't for the 401k community, I'm not sure what the mutual funds would do. 401ks and maybe 529s is education accounts and things like that. I can't remember, besides money market mutual funds, I can't remember the last time I've owned a mutual fund. As soon as Dow Jones bought us, our 401k went to Fidelity, and our 401k at Fidelity, I can trade stocks in, which is, knock on wood, really good. I like the flexibility of that. So that's what I do. So, but this is made up of like 30, 35 really good companies, quality stocks. So it's a really good proxy. Like I wish I'd been watching. I kind of sleep at the wheel, but look at that nice double bottom buy point right there. If you weren't bullish the market and you see something like this making a double bottom buy point, you could, maybe that would sway you a little bit. I know the market surge pattern rec doesn't see it as a double bottom, but I do. Maybe it's not long enough. And that was a lot of stocks had this kind of pattern. So Palantir, HIMS, not as good of pattern. Hood had a really good double bottom, I felt. I feel like there's one other one that did that. So yeah, something on your radar. And the thing about ETFs, man, they're coming out with all kinds of ETFs, and I'm sort of warming to them. I didn't usually want to be in them. I felt like I wanted to be in the leadership, but I like the esoteric, for lack of a better term, nature of some ETFs. So, for example, this Japan ETF, it invests in heavily ownership, founder-led companies in Japan. Now, it's super liquid. So keep that in mind. I'm sorry, I just say liquid, super illiquid, like super duper illiquid. If you get in, it'll be me and you, a rock, paper, scissors trying to get out of the darn thing at 13,000 volume. But maybe the volume improves. Maybe it shows up on some people's radar. Maybe the companies that are in this index or ETF are just really super quality, and it doesn't matter. It just kind of stair steps higher, or even because look, there isn't some type of NAV to it, regardless of if it trades. If the stocks in Japan go up 5% on Monday that are in this ETF, this thing's going to go up roughly 5%, give or take, regardless of how many shares it trades. So I do have a position in it for disclosure. I have had in it, and it's not a lot, but it's enough that it's like I said, it's a bit of a roach motel if other people get in. But I like the fact that the ETF community is just constantly coming out with new ideas. Why? Because they want your money, they want your assets. I don't know what the fee expense, the management fee on this is, to be honest with you, but they're earning a little bit off of me, right? At least as long as I own it. So do some research. ETFs are a great place to be if you want cybersecurity exposure, you want solar exposure, you want EV exposure. There's been some periods, uranium. There's been some periods where the ETFs have done really well. They've gone up a lot, enough that you could make pretty good to really good money in them with a normal size position. So I wouldn't sleep on them so much. The majority of my money is going to be in what I feel like are the best stocks, but I'll have a little bit on the side. I do own this one. All right, so let's jump to stocks. Let me turn off my video so you can see the stocks better. And then we'll just start with the leadership. Nvidia. So it's building this big weekly base. It's not acting all that bad. I don't know if I talked about this on the last video. I apologize if this is a repeat, but sort of feel like this is a possibility in comparison to Cisco. Why won't it let me change to 1995? Come on. And you see how Cisco builds this really big base and breaks out. This is 40 down to 20. This is 50% base. And it had already made a really big move, from pennies down to dollar to 40. So it was up 40-fold. And then it went on to, more than double and then double again. And so this is 20 and this is almost 60. So maybe Nvidia is in like a situation like that. Now you had a bit of a bear market in its long sideways market here. You can see it took a while for the market to get going, to make new highs, kind of like what we're in currently. Now, I'll be honest with you, I could be wrong, but I don't see how, the size of Nvidia that it could double from here. I could be wrong though, right? Anything's possible, especially if they just, if the money liquidity out there just explodes, it's not impossible. So, but could it go up 30, 40%? You can have a really large position because of the quality of Nvidia. That could happen. So I don't own Nvidia yet. I've thought about it based on this kind of scenario that's played out, this analog that I see. If I'm right though about that analog, it looks like Nvidia would kind of do this for a number of weeks. So I feel like there might be some time to get into Nvidia. So that's what's kept me from on the sidelines a little bit for it, but that's a possibility. I'm open to that possibility. And if you have a 30% position in a stock that goes up 50%, that's the same as having, on a money standpoint, a 15% position in a stock that doubles. So you can make the same amount of money in an Nvidia as you can in some of these smaller ones that you don't have to have the bigger positions, because I think there's a little bit, you can sleep at night a little bit better, and there's more liquidity, there's institutional sponsorship. So I wouldn't worry so much about a larger position in something like that versus, Hood or Oklo or something. I'd have a hard time. I have had a hard time. I've tried to have 30% positions in those, and they just drive me crazy. So Nvidia is acting okay. Amazon, nothing wrong with that, right? Coupled handle, relative strength's poor, but it's a big company. Nothing wrong with that. Tesla, bad week, but so far it's this come back with a pretty good week. I'm neutral at best on Tesla, but I like to watch it because if it's going up, market's probably going up. I don't have and if I think the market's changing, it's kind of my go-to short, right or wrong. So no position Tesla. Microsoft made a new high the other day and still holding those gains. Apple's kind of the dog of the bunch, RS22, but not falling apart. What else is out there? Google. Yeah, just pedestrian at best. So the FANG stocks, let's do FANG. Is it FANG B? Is that? That's the leveraged one. It's FNGS, I believe. Brand new high. So I don't know. It's hard to see that pattern as bearish. If you're bearish, okay, well, I would say, well, let's at least see it break down like a failed breakout. Then I could say, hey, be bearish. That makes sense. See some kind of failed breakout though first. All right, so in that area, let's go to some of what they like to call a heat on IB Live. Oklo acting fine. They announced a secondary and the stock's not really going down all that much. They haven't priced the secondary, but gosh, sure is holding up pretty well in the face of a very large secondary. I thought that would have gone down more. I do not own it. This is a trading sardine, and if you don't know what that means, look up the phrase. There's a book by Linda Bradford-Ratchke, and there's a great story called Trading Sardines. I think it's in the book Margin of Safety. But Oklo is a trading sardine to me. Oklo, QBTS. So I have So technically I was very bullish on this, bought it after it did that and sold it fairly well. Usually I end up selling too soon, which is fine because now all of my prices, although I didn't get out in 1977, all of my sales are higher than 1517 where it is currently. But then I went down the rabbit hole of trying to learn a little bit about quantum and came across a video by Martin Shkreli, the farmer bro, I guess. And he had a lot of compelling evidence, and right or wrong, I don't know if he's right or wrong, but it was pretty compelling to listen to him talk about why quantum computing is not going to work, and he's short these stocks. So I just don't. When I hear that type of stuff, I'm not short it, but I just don't want to. I would be upset at myself having had that information, right or wrong, and the stock opened at 5 on bad news and I was in it. That would bother me. So if it goes up without me, it's not going to bother me because I've just decided to pass on it. So there's that one. There's IonQ. I think he's short both of these. There's Rigetti, RGTI. And so if you're long these, watch that video by Martin Shkreli at your own peril. I have a feeling it will get you out of these. And if it does, I hope he's right. What else is out there that I like to talk about? So let's talk about Hood. So to me, this was a really strong double bottom. You even had a handle. So if you didn't buy the 49.88, this was the buy point and holding up really well. This is a leading stock. It might be second tier because of the liquidity, but I don't know. It's pretty liquid. 44 million shares, $70 stock. This is on my radar as far as the leader. So if you're in that one, I think it's holding up like a champ. Carvana. So I am short Carvana. I did short Carvana yesterday. And this, remember I talked about the, what stock was I talking about? Oh, the FANG stocks, how, hey, let it break out and fail. It hasn't quite gotten there yet, but this is looking to me like the potential for a breakout and failure. So I've got like a probing position to be short. And if it gets down into here, I'll get even more short. But if you're in Carvana or you should be watching it because I think it's a proxy for the market. That one, Duolingo, I think is a proxy for the market. The market's okay. They should hold these buy points. They should hold them. Duolingo, sort of. Carvana, not. I mean, I guess it's up, but let's go back to it. I mean, it's at 1%. So no, it's giving it all back. So they're good proxies for the market because they were a couple of the first two to break out. Palantir as well, proxy for the market, one of the first ones to break out. I know what PatternRex says. That's fine, but to me, it's the double bottom, and the breakout was 100. So it's done really well. You're up 37% if you bought it correctly in my eyes, and holding on like a champ. Another massive leader. So Hood, if I have to build a basket of 5 to 10 stocks of leadership, Hood and Palantir are definitely in that basket. A-Lab, I was in this, bought it yesterday, didn't close all that great, got out today. Why? Because the market? No, because that's just what I do. I just, I didn't love the close yesterday. I almost sold it yesterday. It opened lower today. I gave it about 30 minutes and then just got rid of it. It's like to keep the losses small. I just do better. I don't have any problem selling it. I think I got out at 92 or 93, and then I'll buy it back if it breaks through this trend line I've drawn, even if that's at 99. I don't care. If it's going to 125, it doesn't matter that I got out at 93. If I pay 99 and it goes to 125, I'm going to be pretty happy about it. Credo. So this looks better to me than A-Lab. So I actually bought this today. It looked like it was going to get going. It was blue. Maybe it was up $1 at one point, but then, I guess the market. So it's Friday. I like to clean it up. I don't have this rule that I won't carry anything down over the weekend. It's not like this hard and fast rule that I have. but it's probably not a bad rule to explore. I think I've heard some people out there that have that. It's going to be pretty tough for you to get in trouble if you had a rule like that, because the longest you'd ever hold a loser is 5 days, right? If you bought it on Monday and you have a rule that you're never going to take a loser over the weekend, by Friday, you're out. So it's kind of hard for a stock to really, really hurt you if you're only in it for 5 days. So I'm not saying I did that because of that, but the way it just felt like, just clean my hands of it, and I'll go back to it. I have no problem going back to it. I'm a little late to this one. Again, to me, the buy point was here, but you've got the earnings out of the way and the stock has acted really well in the earnings. So that kind of put it on my radar, was that action. MSTR, not a whole lot. Coin, hanging in there. So everything's kind of hanging in there. It's maybe the market just needs time. It doesn't have to go up every day or go down every day. NBIS, another leader that I sold, and then I bought back either one of these days, and then today I just got out of it. Again, it's why? Well, I'm down 4 or 5%, and I'm not going to take it home. Between being Friday and being down 4 or 5%, I'll just revisit it. You know what? The day, it's kind of strange. This is why I like to look at both patterns. The daily looks very interesting to me. I love the fact that poked its head a new high, and I was just kind of going sideways a little bit. But then when I look at the weekly, like, look what happened last time. It pokes its head there and sells off, runs up, sells off, runs up, sells off. And then this is a really big run up. So maybe it needs to sell off. I don't know, but so that's why I like to look at both patterns or both time frames. I love I don't say I love the daily. I like the daily. I hate the weekly. So that also influenced me. Makes it simple. Just step aside, move out of it. Core weave, very extended, needs time, desperate time. But I know we talk about the dinosaur. This looks like I'm gonna make like a T-Rex here, because I used to joke that with Arusha all the time that I'll see a dinosaur in my backyard before you ever see a high tide flag, because they were just so rare, especially in like between when I first came to IBD in 2010 to 2020, when me and Arusha were working very closely with each other. But I don't know. This has the makings of one. Hard to argue with that. It needs the pennant. It's already down 11%. So the pennant would be like 20, 25%. So ideally it goes down a little bit more, and then you get a chance. So it would be a watch list stock for me at this point, but leadership for sure. Definitely in a basket of leading stocks. And then there's this one, VG, Venture Global. I like the industry that it's in. To me, natural gas is a possibility to power all this AI. And it's really come off the bottom really strong. It needs a buy point. So I actually sold it today. And just because I'm looking for its first base. But this is an idea. There's Talon Energy, which I no longer own. I got it shaken out. So it did this, tried to break out, came back in, got me out, and then went up. It is what it is. That's one of the costs of doing business the way I do business. No fun, but that happened. CEG, VST. That doesn't look all that bad. And so these are the energy areas. BWXT needs some kind of handle or sideways action, but the energy area is very compelling to me, and a lot of these ones are holding up really well. Last but not least, you had a couple of IPOs. So Chime went public today. Give it time, but it's nice to get some new merchandise. And Circle was the one that I had a really good day in. It's hard to see. I know it's only like a 4 or 5 day base, but I could manufacture like a little IPO type base here. and I was getting really aggressive with it. Now I did that here, so I thought it was going to go, and then it went down a lot yesterday, and that was tough to stomach. But it never got me out. Never went below 100. Where I'm in at 105, so I'm really going to get out below 100. So I was able to hold on for one day, and then today had a fantastic day. And so this is the lesson one, and who knows what Monday brings. Maybe it's down 10 and I give back part of it, is what it is. But the lesson is, I had no idea what the market was doing. I just focused on what the stocks I was in. And so I got out of NBIS because it was down. I got out of ALAB because it was down. I got out of VG for no really good reason, but I just got out of it. And I got out of, what was the other one? So I feel like 1, 2, 3, CRDO. I got out of that. I was only in for a few hours. That wasn't my objective, to hold it for a few hours. It didn't do what I wanted to do. I'm out. I just don't have the patience for it. But when they're going my way, I have patience and I'll get aggressive. And especially during the day, I'm not saying it's right for everybody, but I'm comfortable with an oversized position during the day because I know I have liquidity during the day versus overnight. I won't hold the same size. So at the end of the day, I'm selling into this because I have too much size for a weekend. I don't want to do that because I feel like it's probably going to maybe gap up Monday, but that's just what I'll do. And I'll keep like a standard position, which is, I think I have like maybe 15% across my accounts. So this is, in the old days, I could tell you that I might look at the market, I might see the market going down and circle is up 4, and your instinct is to do what? Sell it. The market's bad. Sell circle. It'll pay for ALAB. It'll pay for the NBIS that is down. It'll pay for the XYZ that is down. And so I've done that before and regretted it invariably. The fact that it was up and just kind of kept stair-stepping up all day, and I was only watching for the first few hours. Like I said, I lost power about, can't remember, maybe 9 o'clock my time, 10 o'clock my time. But you can see it opened at 110 and did nothing, and then just stair step 115, 116, 117, 118, 120, 124, 125. And so it's just acting strong in the face of that weak market. It's screaming at you that it should be, if not owned, it should be held. So, and I have a lot more risk tolerance than most people, admittedly, but if I'm 70% cash, why can't I have 15, 20, 25, 30% position in something like this? This is how you stack on points. And I'll only do that if I'm having a good year, if I'm up on the year. If this was January 1 and this, stock was doing that, I probably wouldn't have the same size. I probably wouldn't have been adding as much. So I'll treat it a little bit differently. But that's just food for thought. Everybody is to each their own. I know there's some people out there that say they wouldn't buy this. There's not enough days. There's no IPO base. There's no this. There's no that. I get it. That's fine. I'm just trying to read the tape, speculate, and the narrative, the vision of this group is very strong in the eyes of the community. And so I have this imagination, this vision that people can take this stock up a lot. And I want to participate in that with the idea that if I'm wrong, I'll get out. And I'm okay with that. So that leads me to my slide. And I know I've used this before, but I apologize. Because I lost power, I was a little bit unprepared for this video. And I don't have a quote. So I just went to my favorite quote, which is the one I have taped to my screen. And that's courage, patience, imagination / vision, execution. I cannot remember where I first saw this. And I think where I saw it, it was not related to the market. I don't remember if the word was vision and I added imagination, or if the word was imagination, I added vision. I think it was the latter. I think it was CPVE, but maybe one day I'll try to find the source. But it's very much how I trade. The courage to take a trade. You see an idea, it's very difficult with something like Circle has a big ATR, it's brand new, there's no buy point, it's this, it's that. Well, I get it, you know, I definitely get it, but I have the courage to take the trade because I know that if I'm wrong, I'm going to get out at if I'm buy at X, I'm going to get out at Y. And am I okay with that? If I'm not okay with that, with X amount of shares, then maybe I'm okay with it with Y amount of shares. I just reduce the number of shares. Patience. Patience is something I'm really working on, which is why I have it taped to my screen. I'm not very good at that. So I've gotten better and better and better in the last 10, 15 years. I'm just not there yet, like where I would like to be. But I feel like I've really, really improved in that category. But I started at a very low base as far as patience. So I had nowhere to go but up. Imagination, vision. This is important. You have to, like Oklo. Oklo drives me crazy because I had this vision, this imagination that fast forward 6, 12, 18 months, everybody's going to be running around with their hair on fire, that nuclear is the answer to all our energy needs. And I was there and I knew that people were going to do that. I just didn't handle the courage and the patience part. I had that for Oklo. I had the courage part. I didn't have the patience or the execution part for Oklo. So I didn't capture that trade as well as I could have or should have, considering my first trade in that is at 11 and the stock's 65. It's a big, big move. And then last but not least is execution. You got to put it all together. You got to buy the stock right. You got to sit right. You got to have the right position size. You have to have enough that it makes a difference in your account, but not too much that it wiggles you out. That was the problem with Oklo. I had too much size and I got wiggled out. Execution is super, super important. So hopefully that helps. I appreciate all the feedback that I get. MarketSurgeInvestors.com, 800-831-2525. If you have any questions or as far as market surge, et cetera. Have a great weekend. I think I got at least one more week before Arnie and Harold do their market-related webinar, and it gives me a week off. We will see you next Friday. Thanks, everyone.